Welcome to Crowded Market Report by Jason Shapiro.
Hello, today's Thursday, March 7th, 2024. I'm Jason Shapiro with CrowdedMarketReport.com. I know I usually do videos on the weekends, but we have some other interview videos coming out this weekend, and I wanted to do this one because it's something I brought up in our report this week, and I wanted to get it out there because before it got stale. So it's kind of a macro view. What I like to do with macro views, obviously, is I'm trying to determine what consensus is out there and try to find if I can find a contrarian type of take on the consensus and see if that at all makes sense. Because obviously, if you're going to put on trades that are consensus, then the risk reward is not that great. You put on a trade that's consensus, that's already discounted in the market, that's what happens. There's not a lot of big movement to take advantage of there. Whereas if you can catch something that's contrarian to the consensus and that happens, then the markets are going to have to adjust to that new view and there can be a big move. So it doesn't mean that it's right all the time, but it's just looking for places to, find this sort of potential for a big switch in the markets. And of course, I like to look for this contrarian view, see if it makes any sense, and see if the market is actually agreeing with the possibility of that happening, which is the most important thing I've talked about a million times. You want market to confirm any kind of view you have, no matter what it is. So what I'm finding is the thing with interest rates. People are still expecting some form of the Fed to cut interest rates at some point this year. And I look at it like this. If you had gone to sleep 5 years ago and woke up now and looked at the numbers that have come out in terms of GDP growth, in terms of inflation, CPI, in terms of employment growth, you would not be talking about when is the Fed cutting rates and by how much. What you would be talking about is when is the Fed raising rates and by how much, okay? And yet, here we are, still talking about when is the Fed raising rates. There's a little talk of them raising rates, a very small amount of them, maybe not, cutting rates or keeping them the same. But in general, people are still thinking it may be June, maybe whatever, that the rate cut is coming. And I guess what I'm saying is let's say that interest rates are, at 4% here. And they should be at 6%. So they're lower than they should be. What would happen, in my view? What would happen if rates were too low? Would there be a massive amount of investment? There would be a massive amount of money flowing through this system, and that would lead to asset prices going up. Not just, 7 AI stocks or whatever, but things like the Dow, the S&P, the NASDAQ, other stock markets, the Nikkei, the German stock market, global stock markets around the world would be ripping higher. And clearly that's what we have. You would see other assets ripping higher. Because you would see if interest rates were too low, the dollar would be falling. That's what we're having. So therefore, gold would be ripping. Gold's on new all-time highs. Things like Bitcoin would be ripping. Bitcoin is pretty damn close to all-time highs as well. So this is what the market is doing, and this is what the market is saying. So what I think is a possibility is, we get a lot of talk about how the market is going to break something. And therefore, the Fed's going to have to cut rates. And what we hear a lot about is the commercial real estate thing, right? Commercial real estate is going to bring down these regional banks, going to break the banking system, and therefore the Fed's going to have to provide liquidity in the form of printing money or cutting rates. Well, what about if the market is going to break the Fed the other way and force them to raise rates by bidding asset prices up? Because rates are too low. And again, that's what is going on right now, okay? If we come into the June meeting, for example, and I'll make up numbers here, but let's just say the S&P is at 6,500 and, gold is at 3,000 and Bitcoin is at 70,000. You're telling me that the Fed is going to cut rates into that? I'm telling you there's no freaking way. That would be insane. That's my thought on this sort of contrarian take on the macro thing. And I think it's important to consider, not just because it's contrarian, but because it's exactly what's going on out there. There's clearly no lack of liquidity. What do they call them? The tightness of financial conditions is a popular thing these days. There's clearly no tightness in financial conditions with all these assets trading at or very close to new all-time highs. It's clearly loose financial conditions. So to me, you got to keep in mind that there's a good possibility here that the market is going to force the next move by the Fed to be up. And we'll deal with that then. I wouldn't be shorting these things because of the Fed raising rates now. You have to kind of ride the wave and let the market force it. And then we can deal with how the Fed shifts. And clearly before that happens, data is going to come out. We have employment data this week, and all the CPI and GDP is all going to come out. And at that point, it'll be a question of how the market reacts to that and as what the best trade is. But for now, thinking about this switch of the Fed's definitely going to have to cut rates at some point to the possibility that the Fed is actually going to have to raise rates, I think is the most important thing to be watching here from a contrarian take. Okay, so that's my idea. Wanted to get it out there before it became too stale. Would love to hear comments on this. Would love to hear opinions on this. Otherwise, I hope everyone's having a good, profitable week, and I hope that continues. Thank you.
Subscribe to Crowded Market Report by Jason Shapiro.